Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tim McCour, Global Head of Equity Index and Alternative Investment Products at the CME Group, to discuss plans to offer water futures on the Nasdaq Veles California Water Index. Tim, it's great to have you back on Trade Talks as always.
Yeah, Jill, thanks for having me. Always a pleasure to connect with you and be here.
And CME Group recently announced plans to offer water futures on the Nasdaq Veles California Water Index. Guess you can make a market in anything, right? So how has this been received so far?
Yeah, I mean, that's a great question. So we announced the launch of the Nasdaq Veles California Water Index futures later this year, coming in Q4 a few weeks ago. And the response has been great from customers and the market participants. I think the market is genuinely curious and excited about the plans to introduce a futures contract on such a vital and scarce resource like water. And it's been something that's been talked about a long time. So I think folks are really excited to see what CME can do with our partners at Nasdaq in terms of futures on this index. And it's been great reception so far.
Well, I guess the question is, why now? Why is this a market that needs a futures contract?
So when we look at it, about currently 2 billion people already face water shortages in terms of today. And if you look at some of those same reports by 2025, 2/3 of the world's population could be facing water scarcity issues. It's a vital resource. It's a scarce resource. It's important for a lot of businesses and agricultural products. So when we look at introducing a futures contract, what it will do, this is a first of its kind futures contract that will allow market participants to hedge their price risk as it relates to water and manage the associated risks of production or their business. And it's really been exciting to work with Nasdaq, because I think what this does is introducing a financially settled futures contract against an index, the NQH2O index, does really solve some of the challenges we face when looking at this historically, because we're not delivering water, so we don't have some of those issues with conveyance or transportation. This really is about introducing the ability to manage and hedge your risks to the price movement of water based on the Nasdaq Veles California Water Index.
So this is quite a bit different than futures on the Nasdaq 100 as an example. Can you tell us how the contract will work?
Absolutely. So in terms of the underlying market, it is different, but it is a financially settled contract. So in terms of how it moves through your broker system or your clearing member system, it will function like every other index product we do offer at CME. But when we look at the contract, it will be based on the NQH2O index. And in terms of the contract as a multiplier, that index is quoted in acre feet. Our contract is worth 10 acre feet of water. And if you're not sure what an acre foot of water, the visual that we've been using at CME is, if you're thinking about an American football field and you stand on one goal line and go to the other 10-yard line, the opposing 10-yard line, 90 yards, sideline to sideline, and fill it with 1 foot of water, that's an acre foot of water, about 325,000 gallons. Our contract is 10 acre feet, so now fill that 10 feet high, or a little over 3.2 million gallons of water, and that's what the contract will measure in terms of its price. It'll be financially settled against the index and traded on Globex, available for block trading, just like every other contract, but based on that index tied to the price of water in California. And in terms of your ability to use it, it functions no differently. So we're excited to bring this product to market later this quarter.
Yeah, that's a great visual. Thanks so much for providing that. And what types of customers do you expect to trade this contract?
The primary use of this contract will be hedgers, or those folks that have natural price risk related to water. So think about in the California market, think about agribusiness, commercial growers, producers, public utilities, water banks. But there's also use in terms of if you're a landowner, and you're entering into these land lease transactions in terms of you're the supply side of that market. You can also use this contract to smooth out some of that variability between the seasonality of when you enter into some of those land lease transactions. So there'll be tons of natural participants on both sides. I think commercial hedgers, growers, et cetera, people assume and are familiar with, but also the landowners. And then at CME, what we do, and we've been doing for nearly 180 years, our job is to bring together these natural buyers and sellers that have these supply and demand functions and increase the efficiency and the transparency of the price discovery. And we'll also be working with our market makers to try and build as robust a market as possible for the contract.
And Tim, to wrap up, how will you measure success for such a unique futures contract?
Yeah, it's always a great question and always tough to say, but I think on this one, with something so new and first of its kind, success might be measured a little bit differently. What I'm really interested in seeing is the development of that forward curve. We're going to be introducing 8 quarterly contracts plus the 2 nearest monthly contracts. So you actually will have a forward curve around water, which can be used by consumers and people to make more informed, sustainable decisions around their consumption of water. So that price formation will be key. And of course, volume and adoption will be of importance, not only by those hedgers that we just talked about, but some of the other market participants who express interest, whether those be the institutions or asset managers who are invested in agri investment funds or making ESG type decisions and investments. So I think just wide-based adoption amongst all those people that are expressing interest now, coupled with building a transparent, trusted, efficient market for such an exciting and new contract would be a great success. I'm really looking forward to making this happen.
All right, Tim, great to have you with us as always. Thanks for joining us on Trade Talks.
My pleasure, Jill. Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.